All right, good afternoon, everyone. Today is March 13th. It's Tuesday, March 13th, 2012, and we are going to go through all the trade setups that we saw, all the market movement, really. We didn't get that many trade setups, but we did get a bunch of market movement this morning. Unfortunately, it just didn't give us any opportunity to enter, or not much opportunity, I should say. The results of the morning, I took one Russell trade. It was a losing trade for 8 ticks. That is what we did in the live trading room this morning. Let's start off here with the 4-tick range on the ES, okay? This was a pre-market move right here where the BBC had gotten down below the box. I have the rules printed right up here. Number 1, get a higher or lower swing pivot. This was the lower swing pivot. Number 2, the BBC's got to be outside the box. You can see the BBC is the green line right here. That did drop down below the box. The box is the elbow indicator. The bottom of the box is the dotted red line right there. So the BBC got below the box. Number 3 was get a fresh bubble, the red chop bands outside the black prior to the pullback to the BBC. Down here, you see these are the red chop bands, and they got outside the black prior to the pullback to the BBC. Number 4, the pullback must be clean, and it was. And number 5, you enter with an MIT order rounding the BBC up or down to the nearest tick. In this particular case, you would have rounded it down to 72.75 with a target of 70.75. Okay, your target would have been right here at 70.75. This was pre-market, so we didn't take this trade, and it had gone down to target. Now, once the market opened up right in here, we needed a fresh bubble down here, okay? Rule number 3, fresh bubble. We did not have the fresh bubble, so we did not have a trade. So we waited and waited and waited, and then the market went sideways for a long time. By the time it finally started to move, we never got a pullback to the BBC. You see, and that brings us current. We still don't have a pullback to the BBC. So that was the 4-tick range. Unfortunately, we never had any setup over there on the 4-tick range. Over here on the 10K, we had a bearish cross of the MA1 down below the BBC. Right here, this is a 10,000 contract ES, and this is the June contract, okay? We had a bearish cross of the MA1 down below the BBC. Price pulled away from the BBC and back into it right here for the possible short setup, okay? Would have been right there for the move down here into the weekly trading zone and support. I didn't take it because we were too close to the weekly trading zone and support. But that was the setup there on the ES, okay? After it reversed and we had our bullish cross, the price never pulled back to the BBC until just now over here, okay? And now the cycle's going against it, so there's no way you would take that trade. On the 7-minute, I just want to point something out here. This is the 7-minute intraday chart. This does not include Globex data. You can see this was the gap, the overnight gap up right here. And yesterday, you can see we had a bullish cross here of the sentiment indicator. Once we had that bullish cross and price pulled back down to the line in the sand right here, the thicker of the two lines on the sentiment indicator, we typically will get at least a 2-point bounce off it on the first pullback. You can see this one bounced from 1364 all the way up to 1377, 1378. So that was a nice bounce right there. And yesterday, the day before yesterday, that was actually yesterday during the day, I think, right? Yeah, we had a bearish cross. The first pullback up to the line in the sand gave a bounce. This was 63.75 down to 62 even. Okay. I just wanted to point that out as well. We don't look at the sentiment indicator all that often anymore, but I wanted to point that out. Now, the naked 2100 tick. It's not exactly naked. It's got the weekly trading zones and the MA1 on it. Okay. But this morning pre-market, there was a pullback right here, and then that went and did its thing all the way down to the weekly trading zone. This morning in the live trading room, I had pointed out here where price started to trade up above the MA1 again and pulled it back into it right here. All right. And I was thinking that we would get a move up to 75.25, which was right here. It obviously kept going through 75.25, and now we're underneath the MA1 up here, suggesting we could possibly move down from here. All right. Let's look at this 2100 tick for the Mike R trades. All right, there was one of those this morning, right in here, right after the open. We had a bearish cross, and the cycle was headed down. The pullback was right here, so you would have been looking to sell right in there. All right, down into the weekly trading zones, and there's also support right here. If I had my support and resistance dots on, there's support right here. The same thing when it crossed back up. The same thing as the 10K. We never had a pullback for an entry opportunity. Now, let's look at the YM. The YM gave two opportunities this morning. One actually met my, well, from the open, it gave two opportunities. One of them met the normal trade requirements for me. It met the rules. This was pre-market. That's the only thing about this one that didn't meet the rules. It was just a few minutes pre-market. But we had a bearish cross right here with a pullback up to the BBC. So shorting the BBC right there would have been the thing to do. All right. After that happened, I like the first pullback. Okay, so we had the bullish cross with the first pullback right here. This was the spot to get long. All right, and obviously we would have just been looking to get up to the weekly trading zone at the max on that. I mean, it kept going and going and going. The actual entry opportunity on that was down at 12,938, 12,940, right in that range, and it's gone 68 points all the way up there. It's gone 68 points. There was a secondary opportunity in here that I know some of the partners in the room had asked me about. It had bullish divergence right here when it pulled back, and I said I maybe wait for the uptick right here, the up close after it hits the BBC. It would have been right in here for the secondary opportunity. Okay, I did not take that trade. Now let's get over here. Man, what is that noise in the background? Anyway, let's go over here and see. Hang on. There. Let's just go over here and look at the Russell for a few minutes here, okay? From the open, it was all over the place on the open right here. We had some bearish divergence down here, all right? So the close down below the MA1 with the bearish divergence would have been an opportunity to go short. Another opportunity would have been after we printed a resistance dot here, the down close after the resistance dot with the support of the bearish divergence. Okay, and that dropped down here. Put in a support dot here, it went up, and we didn't have any bullish divergence to suggest that it was going to keep going up. It did keep going up quite a ways here up until it put in more resistance, and then it dropped back down. There's not much to say about this piece right here. We had no trade opportunities in there, no real trade opportunities right in there. It was when we got over here where we had some bearish divergence right here. We put in these resistance dots, closed below the MA1. Now the resistance dots with the bearish divergence, you could have entered right in here, all right, with your risk being just up above here. So very minimal risk, 5 or 6 ticks probably risk. You could have entered right here, or you could have just waited until you got the downturn right here with the divergence. Okay, the down closed below the MA1, and that dropped down pretty nicely. After that, something is really odd. Anyway, after that, price had pulled back up here. Okay, price pulled back up to the BBC, and we had a little bit of divergence here suggesting that the BBC was going to hold, and it dropped back down here. Now we put in support dots here. We started to put in support dots when it pulled back up, but the fact that the BBC was right there, we had a bearish cross of the BBC, and we had bearish resistance down here, suggested the BBC was going to hold. All right. Now I went back and forth a little bit in here, but right here, this spot right here in the live trading room this morning, I believe I told the folks about this when we had the support dots right here, and we had the confirmation of the bullish divergence down here. All right, so you could have waited until you got your close up above the MA1 right here, or you could have just jumped in right in here when you had the up close with the support dots with the divergence. Okay, I took a trade very similar to that one over here. I went long on the up close above the MA1 with the divergence when we had broken the resistance. All right, I was taking a broken resistance instead of the bounce off of the support in that case, and that stopped me out. All right, that was my one stop out trade of the morning. As we progressed through, we got into the break period right here, and right over here we had divergence again on both of these where we didn't have any resistance dots to come down off of, so with the divergence you would have had to wait for the down close, which would have been right here. All right, with this divergence. And that was the Russell on the day. Now I am going to bring up the NQ, if I can find it. Here it is, the NQ. The NQ traded a lot like the Russell did today. All right, let's just let me spread it out a little bit here so you can see a little more of it. We didn't take any trades on the NQ, all right, but I just wanted to point it out because we do have some folks that like to watch the NQ. We don't normally do a lot with the NQ, but since the ES, the reason we're getting into these other markets is because the ES and the YM had been pretty flat and untradeable for most of the year so far. So that's why we went to these other markets. That and the fact that we want to get into some European markets as well. Anyway, we had the bullish divergence right here on the NQ with the close above the MA1 off the support dots. Basically the same stuff that was happening on the Russell. Okay, again right here, support dots up close with the bullish divergence. Over here we had some bearish divergence, but we didn't have any resistance dots. You may recall that happening on the Russell as well. Over here, bullish divergence, support dots sending us up. Now right here we broke the resistance. Okay, and here we had our up close. I know we were waiting up here for a long time for this to break above this level in the live trading room this morning. It finally did it over here just before the break. It broke up above that level. Okay, and since then it's just kept going up. Right now we have bearish divergence, all right, but we have support dots right below us. So what we would have to see here is a break of the support dots, a pullback above, and then drop back down below the MA1 with the divergence. Okay, the divergence would work itself out in that time though. That's what we would look for on the NQ. Okay. Let me bring over the 6E. We didn't do anything with the 6E this morning. Oh, this is both 6Es. The thing with the 6E is rollover day for the 6E was actually began yesterday. The actual contract expiration is a week from yesterday, whereas the contract expiration for the ES and the YM and all those other ones is a week from Friday, last Friday. So this coming Friday is expiration for the ES and the YM and all that, and Monday is the expiration for the 6E. So the volume on the 6E is still on the H contract so far. All right, so far. Let me just take a look and see how much volume there is. Yeah, the H contract has 235,000, and the M contract has 68,000. So the volume is still on the H contract. All right. Now this morning when we were watching it, this area right here, not here, sorry. It was on the 5-minute. Let me show it to you on the 5-minute. This area right here where it was stuck for most of the morning. It was stuck from, say, 9, 10 o'clock all the way to just about 11. It had just not moved, and so we really had pretty much stopped paying attention to it. Over here now, when it broke the elbow to the upside, we didn't even have the lines going in the right direction down here. So there was no indication for a long trade off the BBC at that point. All right. The only opportunities after that would have been the up closes over the MA1 when the white was to the left of the green. White to the left of the green. I mean, I'll draw them in for you. Okay. Oops. Sorry. Started that one too low. White to the left of the green. White to the left of the green. Would have been right in there somewhere. Again, right in here. And again, right in there. And that was it so far. Right now we have some bearish divergence. Okay, what we need to see happen is for these lines to roll down with the white leading the green, meaning the white would be to the left of the green, and for price to get down below here, down below 130.104. Okay, if it does do that, then we would anticipate a bounce off of the BBC working on the short side. Okay, that is what we have going on the 6E. So let's see, I covered the Russell, the NQ, the YM, the ES, and the 6E. I think that's it. All right, if anybody has any questions, just type them in and I'll answer your questions. All right, it is 12:28 and we're just about on time today. So I'm gonna stop the recording right here.